You know that moment when you first get off that roller coaster and you feel like you're spinning and you haven't quite acclimated to gravity just yet? Well, that's precisely what this housing market feels like. Let's see. In the past month, our median price fell for the first time this year. The Fed hit the pause button on rates, but then immediately threw some shade by saying that they may raise rates one more time before the end of the year. Then they were kind enough to stick the dagger into the housing market by stating that they plan on fewer cuts next year than we had originally expected. And now the 10-year Treasury yield is rising and we're about to hit 8% interest rates here soon. So, is the sky actually falling, or is this mercurial housing market more resilient than Trump still winning the GOP primary? Stay tuned as we unpack all of this lunacy. Okay, first up, let's check in with last month's sales. Last month, we sold 1,545 homes. While this put us only down 13% from last September, remember, last September, the market was in the gutter. In order to get a more normal comparison, let's look at 2019 before the world went sideways on us. Now, compared to September of 19, we're down 39%. Now, that is a more realistic way of looking at this market. Well, with sales down 40% from the norm, and last month watching our median price decrease for the first time this year, clearly we saw prices decline, right? But did we? On the screen now, you can see that the lunacy continues. We managed to end September up $4,000 with a median price of $449,000. Now, as absurd as this sounds, consider the fact that this puts us up 1% from this very same time last year. Now, even crazier, if prices just stay flat for the rest of this year, we'd end the year up 7% over last year. Imagine with rates touching 8% this year, history may show that our Las Vegas market increased 7% in 2023. This may just turn out to be the greatest statistical illusion of all time. Now let's cleanse our palate a bit and check in on current inventory levels. As you can see now, we ended the month just under 3,900 homes. This also marks the second month in a row that inventory has increased after 7 straight months of decreasing inventory. Now what's ironic is that typically we start to see inventory decrease around this time of year. But as we already established, all bets are off in this ridiculous housing market. All right, and last but not least, let's see how various price ranges are performing in this odd market. Now, the higher the percentage, the more competitive that price range is performing. So first up is the bulk of our entire market, homes priced between $250,000 and $500,000. We dropped slightly from 46% last month to 43%. Next, we have homes priced from $500,000 to $750,000. This dropped a little bit more substantially from 34% down to 29%. Next, we have $750,000 to $1 million. This came down slightly as well from 25% down to 22%. All right, now let's talk luxury. Homes priced between $1 million to $1.5 million. This managed to remain consistent at 24%. And last but not least, we have the ultra luxury market of homes priced over $1.5 million. This dropped ever so slightly from 17% down to 16%. So overall, we're seeing 34% market saturation. While this is better than last October when we were down to only 21%, we're still pretty far off from our very peak of 71% back in April of 21. Okay, now let's try and make some sense out of all this madness. Sales are down, median price is up, along with housing inventory, but overall market saturation is steadily declining. So where do we go from here? Well, as I alluded to at the beginning of the video, our market has been more resilient than anyone ever expected. It almost feels as though the Fed is purposely trying to kill the housing market. But this market is tougher than Michael Myers in the inevitable next Halloween sequel. While new home builders have become more bearish in recent months, just last week, Pulte and Toll Brothers debuted their new community in Summerlin called Ascension. Now, they're about to build 560 homes with a starting price in the low $1 million range. But that's for only 2,200 square feet on the Pulte side. Yes, 2,200 square feet will cost you about $1.5 million with upgrades and a pool. That's the cheapest home. While you would think this is a terrible time, 1,800 people signed up and attended the VIP opening to fight for these 500 homes. While some neighborhoods have become stagnant with listings starting to stack up, the newer and more expensive neighborhoods in, Summerlin, Green Valley, they're still selling for mind-blowing prices. Now, most of these buyers are migrating from out of state and still find Las Vegas desirable and affordable. So, as long as Las Vegas continues to attract wealthy migrants, I just don't see this market tanking as badly as the laws of economics typically would dictate. Even with rates approaching 8%, people need to live somewhere. With just over a 2-month supply of homes on the market, it certainly doesn't look like a crash is imminent anytime soon. So, just this week, I read an article in Business Insider claiming that Las Vegas was the second worst city in the entire nation for declining home values. While they claimed we were down 2.7% in August, we also know that we're in fact up now over last year, not down now. But even so, if we're the second worst city in the entire nation at 2.7%, after rates have more than doubled, that tells you everything you need to know about this housing market. Well, guys, don't shoot the messenger. I don't make the news. I simply report it. So speaking of news, I've got some amazing property tours for you coming this very month. So I'll leave you with this little teaser for next week's video of the most amazing home I've ever toured. Till next time, deuces.